The rand hovering just below that R7 mark, so really where we left it last week. And the G20 meeting really a bit of a damp squib over the weekend.
Good morning, Stephen. Yes, absolutely. Unfortunately, nothing really concrete coming out of that G20 meeting in terms of any concrete measures of currency overvaluations or undervaluations, whatever the case may be. And I think that's really going to mean that for the coming week, that participants are really just focused in on what's happening in Europe, specifically the sovereign debt concerns which have re-emerged out of Ireland. And if those persist, then I think your dollar is probably going to continue to benefit by default from those concerns. And as a result, it puts pressure on the rand to make sustained gains against the dollar. We did see it going above 702 or touching 702 on Friday, should I say. It didn't break above that, but of course, if the dollar starts to strengthen as a result of these lingering concerns, as I say, in Europe, then we could see the rand actually push above that 702 and then head higher.
Of course, we did have a number of Eurozone finance ministers coming out on Friday and trying to calm the markets a little bit, also saying that current investors wouldn't have to bear the burden of any bailout. But at this stage, it doesn't look like Ireland really wants a bailout.
Well, that's just it, Stephen. There seems to be a lot of mixed messages coming through. Ireland doesn't really want any interference, and the rest of the European Union seem to want to come to the party. And until we get clarity on that, I think Euro is going to struggle to strengthen, and that's why I think it's going to be a dollar play this week again for rand players.
And of course, that G20 meeting not coming out with anything to try and curb quantitative easing in the United States, so that's likely to continue at the current pace as well, isn't it?
It looks that way. We saw China coming out last week, and possibly we could see some more monetary tightening coming in from that side of things. But in terms of the States, although there's been a lot of criticism, it's going to be difficult to actually sort of force the Fed's hand in any direction. They need to revive the economy. They've tried everything. They've cut interest rates. They've rolling out quantitative easing, and they want their currency weak. So it's going to be difficult to stop that train, and as a result, it's difficult to see the dollar strengthening tremendously, unless, of course, we have a real fallout in Europe in terms of these debt concerns.
Would monetary tightening in China be rand negative?
Well, it all depends on how you look at it. I mean, in terms of the fact that they are looking to hike is an indication that the economy is doing quite nicely. So that's a positive thing, because that's really the engine room of growth at the moment. But then on the other hand, of course, if we see monetary tightening coming through from China, persistent monetary tightening, then it's not going to bode well for commodity prices, and that could in turn hurt the rand and its terms of trade. So, it just depends on how severe and how prolonged this monetary tightening is. But as I say, if central bank is tightening up on its policy rates, especially in the current environment, it suggests that it's doing a lot of things right compared to most of us out there, which are looking to revive their economies and spur growth.
And of course, this comes as our MPC prepares to meet on Wednesday and Thursday this week, and many thinking that we could have some more monetary loosening in South Africa. But just given the manufacturing numbers we had last week, they were a little bit worse than expected. We have retail numbers coming out this week, but we also have a rand that's starting to weaken a little bit. What's your expectation for this meeting? What's the Reserve Bank going to be looking at?
Yeah, Stephen, we're still going for a 50 basis point rate cut at this week's meeting. And you're right, I think in terms of the manufacturing figures, not very encouraging. We're not expecting the retail sales figures to shoot the lights out either. In terms of the rand, on a trade-weighted basis, it's kind of been flatlining for a while now. As I said a bit earlier, it's really been a dollar play in terms of the dollar-rand exchange rate. But we must remember that we import most of our stuff in dollar terms. So I always look at the dollar rand as a better proxy than the trade-weighted rand, because trade-weighted rand doesn't have a material influence on our imported inflation. It's more that dollar rand. And that's why I think in terms of that, the rand remains fairly strong. It has given back a bit of gains, you're right, but I think it's still fairly strong compared to the previous meeting. So we think that there's enough scope for them to cut interest rates, especially if you look at our growth dynamic. We really seem to be lagging the curve there. Our growth is not rebounding as quickly as some of our emerging market peers. So that could count against us. So we think there's scope for another interest rate cut, yes.